4%, the S&P 500 nearly 5%, and the chock full of tech stocks NASDAQ lost nearly 6%.
It was the worst day for the financial markets in 5 years since the COVID meltdown.
But the president is not worried. He said it was to be expected. Margaret Brennan begins our coverage from Washington. Margaret?
Well, John, more than $2 trillion in value was wiped off the broad market S&P 500 index today, the worst trading day since the depths of the pandemic. The business community continues to be stunned by how broad the tariffs are and unclear how long they'll last. The market's steep decline defied President Trump's prognosis.
I think it's going very well. It was an operation, like when a patient gets operated on, and it's a big thing.
J.P. Morgan estimates the wide-ranging tariffs represent the largest tax increase in nearly 60 years and bring the economy perilously close to slipping into recession. Overnight, the 25% tariff on foreign-made autos took effect. Canada's Prime Minister hit back.
The government of Canada will be responding by matching the U.S. approach, with 25% tariffs on all vehicles imported from the United States.
American automaker GM said it's now hiring at one plant, while Jeep maker Stellantis plans a short-term layoff of 900 employees due to production halt in Mexico and Canada. And at least 2 more rounds of tariffs are planned for most of the world, including manufacturing hubs like China and Cambodia, as well as tiny countries like Africa's Lesotho, and even a remote uninhabited island near Australia. It will take several weeks before shoppers see price increases for imported products. President Trump says companies will now move manufacturing jobs back to America.
There was an expectation.
Michael Strain, a conservative economist, predicts that could take years. So this isn't a switch that you flip and suddenly manufacturing is back in the United States of America.
It's also not a switch that you should wish to flip. In the United States, service sector wages are higher than manufacturing wages. We should not wish to move Americans from higher paying jobs into lower paying jobs.
Why aren't more conservatives saying what you just said, that the president is wrong?
The president's trade policy is going to do a lot of economic damage. It's going to reduce the income of households. It's going to reduce the purchasing power of wages. It's going to increase unemployment.
The administration says the opposite of everything you just said there.
They are.
The Commerce Secretary says jobs are going to explode.
Yeah, they're wrong. And they will be proven wrong if they stick with this policy.
Margaret, I know you've been on the phones calling other people around. What else are you hearing?
John, I continue to hear surprise that the president's vow here really seems to be remaking the global economy, not just competing with China, not just bringing back factory jobs to America. Not everyone in the investment community is against tariffs, but they're surprised at the seemingly arbitrary nature of how the calculations were made, that allies, even Israel, were being punished here, and also surprised to hear President Trump rally against the very same free trade deal that he negotiated during his own first term.
And Margaret, when it comes to tariffs, it doesn't sound like the president is finished here by any stretch.
No, he's not. Now, the Treasury Secretary did say that if other countries do not retaliate, if they just lay down, if they take this, this could be the worst. It could be the ceiling for them. But President Trump said this afternoon that he's looking at more tariffs, possibly on pharmaceuticals and potentially on computer chips.
There have been multiple messages. Margaret Brennan in Washington. Thanks so much, Margaret.
Money Watch correspondent Kelly O'Grady joins us now to walk through some of the scenarios as to how this might actually play out. So, Kelly, let's start with a best case scenario.
Yeah, so when it comes to tariffs, I want to show you a couple of things. These are some of the positives. It's not exhaustive, but it could mean more products made in America because companies would move manufacturing here to avoid those steep tariffs. That could also create more American jobs and put that all together, a more self-reliant economy. Now, this might take years years and hundreds of billions, maybe trillions of dollars, but it certainly would have been good during COVID to have a domestic supply chain. Now, the other thing, though, is also revenue from these tariffs that could offset government debt. The White House says $700 billion this year.
Do people have the patience? That's the question. What about a worst case scenario? What's that look like?
So this happens a little bit more immediate, kind of the next few months, maybe a year. You saw the stock market today. Investors really didn't like this
Not at
because
all.
of how it could impact profits at companies as well as the consumer. And that gets us to spending. If inflation goes up because of tariffs, which JP Morgan is projecting 1 to 1.5% this year, based on yesterday's announcement, consumers might spend less, which means a slower economy. And then finally, a trade war where you have retaliatory tariffs and countries don't come to the table and negotiate, but it's all back and forth.
A lot of this is based on emotion. What about a middle ground? Is there one? Will we see one?
That's the more likely scenario. I mean, nothing in the economy happens in a vacuum. Yes, this is the impact of tariffs, but there will be other things, likely higher prices. Companies will absorb some of that, but definitely some short-term pain.
Again, patience. Will people have it? We'll see. Kelly, thank you so much. Well, Europe is threatening to retaliate for the tariffs by putting a 50% tax on American whiskey. Janet Shamlian reports that has the makers of Kentucky bourbon worried.
At Lexrow Distillers in the heart of Kentucky's bluegrass country, they'll produce more than 100,000 barrels of bourbon this year, about 5 million gallons.
How many barrels in here?
A rick house like this can hold upwards of 25,000 barrels.
What President Brandon Gall is less certain of, how souring trade relations will bruise the state's whiskey industry.
What is your level of concern right now about tariffs?
It's something that we are monitoring very closely. As an industry and as a business, we are concerned.
As the bourbon ferments, the industry stews. American-made spirits were already targeted by Canada and the EU during President Trump's first term. This time, they're also being pulled from store shelves. Retaliation with a twist.
Our wish as an industry is just disentangle us from the debate.
We met Kentucky Governor Andy Beshear at the state capitol to talk about the impact.
The instability is hurting all of our industry and all of our economy.
The amber liquor is his state's liquid gold, generating $9 billion a year and responsible for more than 23,000 jobs.
That's the farmer who grows the corn. Those are the drivers that deliver it all over the country. A ton of hardworking Kentuckians are impacted by these tariffs.
This is a largely red state. You're a Democrat. Maybe a lot of people in your state are for this.
They were for the president, many, if not most of them, and they were for a number of his policies, but what they heard was he was going to help them have a better life, that he was going to improve the economy, that he was going to make it easier to pay bills at the end of the month, and that he was going to bring down prices. That's not what's happening.
Most bourbon is aged in oak barrels at least 4 years. Some premium bourbons more than double that. Making it takes patience, something distillers say has never been needed more.
In an industry where you're not planning for tomorrow or a month from now, but 3, 4, 5, 6 years in advance, it creates a lot of question marks.
The concern now, their hopes may be running dry. Janet Shamlian, CBS News, Bardstown, Kentucky.
CBS News is following the rising cost.